Hello, everybody. My name is Alesh Eisner, and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is the weekly My Thoughts on Market Happenings for the week ending September 24, 2021. The Toronto Stock Exchange is down for the week, but the S&P 500, Dow Jones, and Nasdaq are up for the week after a very bad Monday where the losses were worse than 2%. Oil is also up for the week. So first we turn to China's Evergrande, a real estate property developer. Evergrande's business accounts for about 2% of China's GDP, and the stock of the company lost roughly 90% of its value. Hence, at this point, it seems the worst case scenario of a controlled crash, bankruptcy, and breakup of the company by the state looks likely to be absorbed by the Western rather than Chinese markets. Evergrande committed two great sins of using way too much leverage and financing a great deal of its development through the shadow banking industry. Yet the company's probably too big to fail, requiring the intervention of Beijing as soon as this week. China is adding liquidity to the markets amid the Evergrande risks. But the uncertainty of a systemic contagion from China's Evergrande is an issue that likely needs to be resolved favorably before anything else. How this situation is handled is critical to how the markets will unfold from here. While there's much uncertainty about how China will handle this, betting on contagion has historically been a poor bet, fortunately. Staying with China, the Chinese regulators say crypto and crypto mining are now illegal. There have been recent pronouncements relating to this already, and it looks serious because multiple government branches and regulators look ready to enforce this. Now, on Wednesday, the US Fed left the interest rate unchanged, and it's expected to rise next year. And bond buying tapering could begin in November. Also in the US, Thursday, the US jobs numbers had 351,000 claims versus 320,000 expected, which is not great news, but the markets ignored it, being preoccupied with the items in China. So seasonality, Fed tapering, the Delta variant, inflation, negative earnings revisions, the US debt ceiling, and economic decelerations are just one of a few set of headwinds that investors have to cope with in the US. Also, I'll add to that the worsening chip shortage that's going to cost automakers 210 billion in sales. The shortages could last until the end of 2021 or into mid 2022, depending on who you talk to. And finally, in Europe, we have a bit of an energy crisis rippling across the continent as wind fails to blow as expected and natural gas prices surge. And this could, of course, serve as a warning to any economy attempting to manage a power grid transition from oil and natural gas to renewables. Finally, arriving in Canada, we had an election in Canada on Monday. We got the same Liberal minority. So there is an increase in corporate tax rate, very likely. The capital gains inclusion from 50% to 75 increase is not on the Liberal agenda, but the deficits and the NDP, which the Liberals will have to cooperate having the inclusion rate on their agenda. So it may become a reality. So I understand that investors will be informed that the inclusion rate is changing from here on out, rather than being warned, because there could be a lot of selling in the market and a lot of chaos. And so it's likely the announcement will simply be made and everything from then will have the 75% inclusion rate. So that concludes my take on this week that has been, ending in September 24th, 2021. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.